All right, so today, if you couldn't tell by the title of this video, we're going to be talking about volume profiles. So whenever people ask me about how do I learn order flow, where should I start, I always tell them learn auction market theory first and then learn about the volume profiles. And then from there, you can move on to the other tools, which are kind of like your sniper scopes, I like to call them, and take it from there. But yeah, in this video, we're going to be going over volume profiles, the basics of volume profiles, how you want to use them, why are they significant, and components of a volume profile. So for those of you who have no idea what a volume profile is, it is literally a visual representation of how much volume is traded at each price level. So this would be what is known as a volume by price chart. That is what a volume profile is. It shows you the amount of volume traded by price. And just coming back to Sierra real quick, I can show you guys on the bottom of the screen here. This would be an example of volume by time. So you obviously cannot see where the volume was traded at in terms of price, but you can see when the most amount of volume was traded, right? So coming back to volume by price, we can actually see where the most amount of volume was traded, what prices were the most amount of volume traded at. So because of the white background, you can't really see the components of this profile. So what I'm going to do is I'm going to just draw it right next to it. So let's just say, for this example's sake, we're going to imagine that this is the same profile we're looking at on the left side of the screen. I'm just going to draw this out so it's easier to see. So within a volume profile, there are certain components to it. Let's just start with where the most volume is traded at, down at the bottom right here. The area of the most volume traded is going to be called the point of control, otherwise known as the POC. This is just where buyers and sellers agreed on price the most, and this is where the most transactions, the most facilitation of trade took place. That's called the point of control. And if you remember from the auction market theory video yesterday, 68% of volume is transacted within what's called the value area. So this is obviously fair value down here because this is where most amount of transactions occurred at. So within 68% of this range, which I don't know if this is actually 68% or not, but for example's sake, we are going to forget about the 68% number and we're just going to focus on this being where the most volume was traded at. So this would be the value area, like I just said. The top of the value area would be the value area high, and the bottom of the value area would be the value area low, the VAL. So the value area high, the VAH, the value area low, the VAL. So the area where the least amount of volume is traded, these are referred to as low volume nodes. And we're just going to say this is the low volume node right here. This would be called an LVN. So there are low volume nodes and there's high volume nodes. This would also be considered a high volume node right here, but anywhere where there's a spike in volume would be considered a high volume node. So these are the basic components of a volume profile. I know it's kind of messy, but just to put them all out for you. So these are the main components of a volume profile. These are the significant places on a volume profile. Now, the reason why I said earlier we're going to forget about this 68% number, for example's sake, is because some people like to use 68%, some people like to use 40%, and really it's just about seeing where the most volume was transacted. So if I were to show you guys my daily profile again, the way I have mine, I have my value area set to 40%. So the area that's highlighted right here, according to my settings, this is the value area. Now, something we can see is that really the edge of value is more up here, potentially right here at 78.80 or 79.80. But really what you can see is this value area high on the 40% is not as significant as this area right here at 480, for example, where the value area actually tapers down and drops off pretty steeply. Same thing with down here, except down here, this value area would actually be significant because you can see volume strongly drops off below this price, which is right at 470. So now that you know what makes up a volume profile, we're just going to talk about how you could potentially use them in your analysis for the session to take high probability setups. So really the main thing in how I use the volume profile is, let's just say we have a balanced day, right? It looks like a letter D. So this would be fair value. Buyers and sellers agreed on price in this range, and where the most volume was traded, this would just be the point of control. But since this day was so balanced, neither buyers or sellers had the upper hand and created an imbalance. So this is what a balanced session is going to look like. It's going to look like a letter D. It might not look like a perfect letter D, but overall, in general, a balanced session is going to look something like a letter D. So the main way I like to use the volume profile is we want to see specific areas to gauge whether there's going to be acceptance or rejection in prices. So let's say this profile looks like this, and the next day we're opening up. So since the previous day was balanced, our levels of interest are really the previous session high and the previous session low. If you remember from auction market theory, there's two types of activity. There's initiative activity and there's responsive activity. So first thing we're doing is we are expecting responsive activity at this previous day's high, for example. We are expecting prices to be considered high here, and we're expecting sellers to step in and overwhelm the demand, which in turn, for transactions to be facilitated, price is going to have to move down. But what could also happen is buyers could end up accepting higher prices and bidding it up, causing a breakout of this balance range. So really, the way we're using volume profiles is we are looking at them and saying, if there is acceptance above this high, we can expect a move up to either new fair value or previous fair value. What that's going to look like is we are going to have volume building at these prices. And on this new day profile, let's just say it might start off looking like this. So whenever we see volume being transacted above a previous day's high, that's a good sign we're going to continue higher. Let's just say we are getting the responsive activity that can be expected. What that's going to look like is more often than not, you're going to take out the previous day's high. And then what you could potentially see here is buyers start getting trapped. And this is just absorption. So let's say there's a lot of buying effort here, but price is not moving up. If they get put underwater, this could result in a sell-off down to the opposite end of the range. Another thing that can happen is that we just take off. Another thing is we just completely reject the high and sellers step in very quickly. And what that's going to look like on the new session profile is you're going to see very little volume traded up here. So it's going to be volume tapers off. And then as we come back into fair value, this is when you're going to see more volume trade. Same thing to the downside, where we could have lower volume. We could have buyers and sellers disagreeing on price. Therefore, less transactions are being completed. And that's what makes the volume profile taper off, because less volume is being traded. Same thing that I just explained on the upside can happen to the downside. If we were to break this and build volume, let's just say we're building volume, right? If we were to do that, this would be a good sign of sellers accepting lower prices. And then we continue lower down to previous fair value or to find fair value. So the main way that I'm using volume profile is I'm looking for points where I want to see either acceptance or a rejection. And then I'm using a session volume profile and the order flow to basically determine are new prices or are prices outside of previous balance going to be accepted or rejected. So that's the main way I use it. So I'm having points of interest and I'm gauging acceptance or rejection at those points of interest. So that's going to lead me into the different kinds of profiles you can look for or you can pay attention to. So here are my daily profiles. Like I explained earlier, this is a daily. This includes the regular trading hours and the electronic trading hours for each day. So these are daily profiles. To the right here, this would be a higher time frame profile. This one includes the contract that we're trading. All of the volume that traded in this contract is shown by this profile to the right. So it's more of a higher time frame profile. Move myself over here real quick. The next profile I'm going to talk about is the session volume profile. So if I go to my settings here and make it a little bigger for this example, let's just put it at 50. So over to the right of the screen, this is the session volume profile. So this is going to show you the regular trading hours session volume profile. As soon as that 8:30 for me, I'm on Central Time, as soon as the market opens, this profile will get created, and this is going to show you the volume transacted at each price during the trading session. So this is kind of how I use them, and what I personally do is I'll go to the daily profile, for example, and what I was looking for today was we had this overnight area of low volume. We had this area of low volume from overnight. So I was using this in my analysis and I said, all right, if buyers can accept these prices and take us above this area of low volume, I wanted to play long today up to first spot I had was at 650, and then the next spot ultimately was at 460. And if you look at the right here, you can see this is where previous fair value was near those all-time highs. This is also a supply zone as well, but that was my plan for today. I actually had no plan to get short today. I wasn't saying if buyers don't accept this, then we're going to move lower. That wasn't part of my plan today. FOMC being today and how we sold off yesterday. So it just wasn't a part of my plan. It definitely could have been a part of my plan, but you can see looking back at this profile that as soon as we opened up, this is the candle we opened up on, buyers did not accept these prices and sellers obviously very heavily were letting them go today. So this is just a area of low volume where you could have found a potential location of interest. And instead of only waiting for buyers to accept these prices, maybe the better approach should have been, all right, if there's not acceptance here and we reject this low volume, then maybe I could look for a short. That just wasn't part of my plan today. Like I said, once again, but that's pretty much how I actually use volume profiles. So I'm looking at the daily profiles, I'm looking at the key levels. I will also look at the higher time frame, but I'm not really making decisions based off of it as much as like I would, like I'll use them more as targets than I would basing decisions off them for the most part. So since I'm a scalper, since I'm looking for 10 to 15 point moves on ES, and since I'm looking at quicker trades, like my normal trades will last anywhere from 5 to 15, 20 minutes. The more relevant way to use the profiles for me is to look for the most recent points of interest. And that's why I'm primarily using the daily profiles. And depending on what the context of the market is, that's just how I use them. So if you guys are watching this and you're not going to trade exactly like me and you have a higher time frame approach, or maybe you're swinging or just an intraday trader with bigger stops and bigger targets, you might use the higher time frame profiles more in your analysis, and you might have a different approach than what I'm explaining right now for how I use them myself. But the overall message and the overall way you're going to use volume profile is once again just going back to acceptance and rejection of certain prices. That's really what we're looking for. That's really what we're looking for every time. We want to get prices of interest where a lot of volume traded, or where fair value was, or where barely any volume traded. And we want to look for acceptance versus rejection at these prices. And that's why auction market theory is so important to learn before this, because without understanding auction market theory and the basics and concepts of it, then the volume profile is kind of just, you really have no way of interpreting what's happening on the volume profile. So once again, some people use volume profiles a little bit differently. Some people like to use fixed range volume profiles, where we're now on trading view, if you didn't realize. And say I just come down to a 30-minute here. So if you're using trading view, one thing some people like to do, and you can do this on any platform, but some people like to look at the fixed range. And what that's going to show you is, so this is just going to show you the volume profile for the range you're in. For some reason, it's taking me all the way to current prices on TradingView. I don't really use this a lot, but some people like this, like they'll just use the fixed range of the overnight session, or whatever batch of prices they're looking at. So you can use a fixed range volume profile, and you can also use an anchored volume profile. So if I just anchor this volume profile, once again, it's right here in the volume based section. If I anchor it to that high, on the right side of the screen here, you can see that it creates a volume profile for the time that I put it at and on. This is just some ways you can use a volume profile, and the same things are going to apply. If you want price to move higher above this 435 price, you want to see buyers accept in here, you want to see volume transact in here, and more often than not, it's going to move decently quickly through the low volume areas if they're being accepted. Back to the drawing board here. So whenever you're looking at profiles, there's a few different shapes that can pop up, shapes of the volume profiles that you are going to see. And remember, these aren't going to be picture perfect all the time, but generally this is what they're going to look like. So a D shape, you guys have seen me draw this already a bunch of times. This just looks like fair value, and it might, volume's going to die off. Volume's going to die off like that. And really what it is just showing that buyers and sellers agreed on prices in this area of fair value. This is what a balanced session is going to look like, a letter D on the profile. And just to show you guys a quick example, keep in mind this includes the overnight, but see how during the regular trading session, this is from Monday of this week, see how that profile looks like a letter D, and we are just consolidating in this range. So buyers and sellers were agreeing on prices during Monday regular trading hours, and this is what created this D-shaped profile. The next shape is a letter P. So whenever you see a P-shaped profile like this is basically what it looks like. It looks kind of like a bull flag, and it's really just a move up followed by consolidation or buyers and sellers agreeing on prices at this location. So if you get a session that looks like this, you can go into the next session potentially expecting continuation higher, or if this value were to break, once again, if sellers are accepting lower prices, you could see it move down. But most of the time, or majority of the time, a P-shaped profile for a daily profile is going to be a sign of buyers accepting higher prices and a potential move for continuation. The opposite of a P shape is a B shape, and it's the same thing I just described, except to the downside. This is where sellers are accepting lower prices. Fair value is now being traded at lower prices, and you could potentially expect a continuation move downward. So this is a lot of what we've been seeing this past week. If I show you guys after we had this, so this was last Thursday. What does this look like? Pretty clear letter B, right? So it doesn't mean the next session is going to sell off guaranteed, but this is now considered fair value for buyers and sellers. The next day we get more of a balanced session during the regular trading hours, but you can see that overnight included, we sold off to it before balancing. So once again, the point of control, it's down. See how the point of control and the fair value in general is lower than the previous trading session. Once again, sellers are now accepting lower prices. Come down to Tuesday of this week. This is less of a P shape, but you can see that after balancing overnight, we sold off, we developed fair value. So this is what I'm saying, when it doesn't always have to look picture perfect. What really matters is where the session closes and how the profile looks like from that session. So if we have a P shape and we close above the P shape, or if we close in the P shape area, this would be a bullish close to the session. If we had a P shape and we closed below this P shape, that wouldn't be an indication of continuation higher. That would be more of a bearish situation if we close below the P shape. And once again, same thing for the downside. If we sold off here and then we closed above this 50% or above this P shape, this would not be a bearish indication. This would be more of a bullish close on the session. If we come down here and we close at this price, this would be more of a bearish indication. This would be the next session. You could potentially look for more of a higher probability continuation setup to the downside. The final shape of the profile that we have is a double distribution, or even sometimes you're going to see a triple distribution. And what this looks like is, just imagine these are the same size right here. Let's just imagine it looks like two mountains. Yeah, you guys can use your own imagination for what these look like, but this is what a double distribution is. So a double distribution is two areas of fair value separated by an area of low volume. So this is what a double distribution looks like. Go over once again how I personally use volume profiles. I don't use them the same way as everyone else. It's just because I'm more of a scalper. I'm looking for short-term trades. So I focus primarily on the most recent price action. So let's just use this week for an example. Like once again, going back to Monday, the regular trading session was a very balanced session. So whenever you have a D shape or a really balanced session like this, what you're gonna do for the next session is you are going to mark out the highs and the lows of the session. So if the previous session is balanced, in order for a move to be, in order to see a stronger move outside of balance, what do you want to see? You want to see acceptance of prices above this fair value, or you want to see acceptance of prices below this fair value. Until there is acceptance above or below fair value, you can expect responsive selling at the top of the value area or the top of the range, and responsive buying at the bottom of the value area or the bottom of the range. So one thing that I have learned in my experience is that if we have a super balanced session, I've learned that using the highs and the lows of the session is more relevant for the way I trade. So if I just mark those out for you guys right now, the high is right around 75. You can see that overnight we actually swept this high. And where did it take us? All the way down to the previous session low. Swept the low, not really an aggressive sweep by any means, but we bounced right off the low where there was responsive buying at. So this is a perfect example of that responsive activity that I was telling you guys about in the auction market theory video and also in this video. So boom, responsive activity, responsive activity. Next day opens, and I know this is kind of harder to see, but once again, we come back down first to this previous day's low, and responsive buyers showed up. Where did it take us? All the way to the other end of the balance range. And we see once again, responsive selling. Where did it take us? All the way down to the previous balance low. So what actually ends up happening here is we find acceptance, sellers accept lower prices, and we break the value, and we finally break out of this low and kind of get a retest up into it before selling off for a continuation move. So this is just like, this week was just a prime example of auction market theory working, and prime example of both responsive activity at the highs and the lows of the value area or the fair value. And also you're getting acceptance below fair value for a perfect example of a continuation move or a breakout of balance. So this is really how I use them. Like I said, like that's how I use volume profiles. I'm really looking at what happened overnight and during the day. I'm finding areas of interest, and just to give you guys another rundown of my plan today. So here's yesterday's session. I'll shrink it down a little bit for you. So here's yesterday's session right here, and the overnight is included in today's session. My plan for today, if you guys would just ignore everything that happened from the open, which the open is right here, by the way. If you ignore all the volume profile, if you ignore all the volume, what happened is we had this low volume node overnight. My plan was, if buyers can take us above, accept higher prices, I wanted to target first conservatively this this 450 area, and then after that was this edge of value on the higher time frame profile. Those are my targets for today. That was my plan. But clearly what happened was we got a rejection of that low volume area from overnight, and we sold off into lower prices. Now the volume looks so bulked right now because we actually did get a bounce, and buyers are transacting at higher prices as well. So we're building value, obviously, in this area right here. But notice how whenever we came up and tested the area of low volume, notice how the low volume area remained intact, and we were not transacting a lot of contracts. A lot of volume was not transacting in this area of low volume from overnight. So yeah, that was a pretty long video. I hope that all made sense to you guys, but that's how I use the volume profile in my analysis. And that's the basics of the volume profile. So if you guys haven't subscribed yet, make sure you subscribe to the channel, and I'll catch you guys in the next video.